Good morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and it's the 26th of May, 2025. Hope you all had a great weekend. The summer is upon us, and Africa, here we come. How exciting is this? Anyway, it's all good. Let's have a look at the markets for Monday, and I'll try and give you an idea where we're going to go for the week, and then we'll see if we can get you where you need to go. It's the last day for me for a while, and I appreciate all you folks that have been here with me every step of the way. So thank you for that, and I will see you guys again in the end of the summer. So where are we looking? We're finally broke market structure here. We've come back. We found the support at the top of it. So we displaced above, came back down. Now I'm looking for a run on these equal highs above us. And the idea here is, in a 5-minute chart, we've come back down to this discount box, right? We kick back up above this one right here, this yellow line. We get back up on top of that. Then we're looking for a run on the highs above us here. Ideally, you want to see this get broken. Its mean threshold get broken. We take the upside, and then start running for these equal highs above us. And then my ultimate objective only for today or tomorrow as the upside is this pocket up here. There's all SIBI on this side, so I'm looking for it to run back up into there. Look for 50%. Take your SIBI, break it into 75% or quarters, and then just check those levels against the BISI on the other side. So we're looking for some sort of run down in here, run out these lows, maybe get even down into here. There's lots of little pockets down here you can still reach. We've got to get above here for that to keep going higher. So let's look at okay, 3 people in this morning. Good morning, you 3. Let's have a look at, let's look at the daily here. Start there. Well, let's start at the weekly. What the heck? Get rid of all these out of the way now. And that was a few weeks ago. Looking for, that's my upside objective. That was May 5th. We're looking for it to go higher. It's definitely going higher. We're into this weekly objective now. So upside 21,631, 21,625. Is a weekly upside goal. So 21,902. and then see if we can't reach all the way up into here before June. Well, it's only this week, so I doubt we're going to make a big run like that. Maybe it's possible, I suppose, make a big run up here. Anyway, that's the upside objective long term in here. We could make it to here. I see nothing more on a weekly chart. Back on a daily chart, you'll see that there's a upside, two upside objectives to reach for through this week. If this ends up just ripping out of here, go 1, 2, 3, yeah. I could make it all the way up to this spot here. A lot of people are going to think it's going to run these equal highs out here. We do have another one above us here. I'll have to incorporate that whole thing. All right. So if we roll over here, we keep coming lower, we don't get back up above this level, this little pocket right here on the daily. We've got above it, now we're below it, we're coming back into it. So if we roll over now and it comes lower, this breaker here is the downside objective to reach for. If we can get back above that level at 21,449, we get above that on a close, take this high, we can keep going higher. So we've got to get above that little cluster of highs, which is what we were looking for over here. So we got some objectives to reach for on the short term and see if they provide support with an upside objective much higher that you need confirmation on. So if we get these highs that we're looking for here, then that gives us a free rein to keep running higher, but we got to get a body above that level. And then your hourly, we found support off of here. Fair value gap's now filled. We're in this mean threshold of the hourly candle. And I want to see if we bust through that now. We get back down to a 15-minute. Premium, taken, supported. Keep going higher. Yeah, it's in this little consolidation. I want to see it pop up above here. Start running these equal highs out here. So upside for now. We'll see what kind of a Judas swing we get this morning. I'd like to see us get down into 21,245 area. There's all this cluster of lows below us here. We found support off this level, traded through it. So we're down into this discount box here. So if we get now, if we can get through this level, look for the lows, and then your next downside objective would be 247 to 252. and the bottom of the daily here, this imbalance, 234. See if you can get a reaction off of that and start to move back up higher. So we're looking for any opportunity now, 9:30, 10 o'clock for a reversal. Let that carry us higher. Let's look at ES. Yes, it's got equal highs above them as well. So upside objective on a 15-minute chart is 588 to 5 or 58.88 to 58.90. You want to see that break through that on a body and a body above here. So if we run down one more time to take out these lows at 10 o'clock, get that Judas swing happening, create some lows here, and then start going higher. Unless 9 o'clock's the ripper. We didn't really take the lows out though, so I'd like to see that come back and take these lows out. Great. A new low here. And then look for a run up higher. Let's go for that. Support. Run higher. Equal highs. This could come down into 42.070 to 060. I wouldn't want to see it get lower than that. Start going higher. And it starts to lose its love for me. If we start to break through this level, then we look for a return back into this mean threshold. If we lose that, then look for this level again one more time. And all of them together. Higher low, lower low, lower low. This one refuses to go lower. Let's see us get back above this level. Bodies above here, come back, tap it, look for that to go higher. Bodies above this level, come back, found some support, look it to go higher. And it's just closing above that one now. So we have an SMT here with NASDAQ refusing to go lower. These guys went lower. This one refused to go lower. And this one went lower. So finally, copper's above our level here. Come back, find some support at this. Watch for copper to go higher. It's taking us a while to get our copper moving in the direction we wanted it to go. So Well, we could still come down lower in natural gas to 324.7 and 324.9. You'd like to see that last piece stay open there, and for that to keep marching higher. You'd have to get above this level here, though. Oil. You can get a body break above these highs. You can run up higher into this range, 50, 62%, all the way back up to that premium level. It's 61.98, 61.97, somewhere around there. If we just come back into this level and come lower, looking for this box here. Looking for this level. What am I doing? Get down into there. See what kind of support you get off of that, and then run for the premium levels here and here. If you can get above that lot, look for a run higher. Well, I warned you about the Zoom communications looking for the consequent encroachment. We gave you this as the change in direction to be careful. Came back into it and went lower. So if you're still in Zoom communications, you can expect 50% of this range. We've hit this level once and you wanted to see it react off of that and go higher. The fact that you've just tapped the bottom of that inversion and now we're going lower again tells me you want to reach into this breaker right here. And see if it wants to get lower than that. That DAX sure did a little dive down the other day. Oh, it's Friday. We didn't even watch this one. Boy, they took a nice big dive down, took this out. Interesting. Found support off these levels. Look at that consequent encroachment. Delicious. And then come back, found support. Ran through it. So I want to see that come through here and take these lows out. I wouldn't start getting excited about this again until we got above this level on a close. Otherwise, looking for more downside in gold with a potential run down into here. Wait for structure break. Run straight through. Next one. Support the breaker. Keep pushing higher. You want to see this close above this level at 109 now. 109.950. Get up on top of that, run higher. Back into this imbalance you got here, and 110.620. That's the level I'll be looking for to see what kind of reaction you get off of that. So Pato looks like it's on the way down. Drop below it, come back into it. See if this breaker holds price now. You want to see that start getting back up above that imbalance if you want that to go higher. If not, that's going to start swinging back down. Ideally, I want to see it break this low here so we can get a new deal back down here this July, August. Lilo and Stitch made more than Top Gun. When it's domestic, I think it's domestic opening. Maybe like $300 million or something like that. Lilo and Stitch, it's a Disney cartoon, so you would imagine that that's going to help prop up some Disney here. So we'll see where they open up today. We went and saw Mission Impossible last night. Good job, Tom. If you're watching, Tom, good job, man. Good job. Well done. That's what I want to see. I want to see the big rollover. Get back down into here. Come on down. Roll over. Give me this level here. That's what I want to see. We got through this level here. We're coming back into it. I'd like to see us keep coming lower now. Got to get back through this level here, though. There's a small little pocket here. Wheat hit our upside objective last week. Getting a rollover. We don't want to see it get back through 5364. I just want to see that stop right there and then start running back through this level again. See if we can get a next price leg higher into this level right here. That should take us there, I think. We stop right where we're at. Yep. That'll take us right into it. So that would be the next price leg higher once we can get through. Where would I like to see that run? We can break that high. Look for the consequent encroachment of this upside objective here in wheat. Sugar's still trying to hold on here. Got nothing for you, sugar. Good morning, Hadi, Jean-Paul, Hans, good morning. Coffee hit our 4-hour objective on Friday. I want to see the soybeans hold here and start marching through. I want to see it take out those highs and start running higher now. If we take out that low, look for a run back down into the discount box here. 5 cattle. Now we're on the other side of this. You want to see that roll over and come back down. Start reaching for this $200 range. I got nothing for cocoa just yet, but equal lows below us. So if we stay below this level, look for a rundown. We already got range extension already. So if we get back up above that level, look for a run back into here. 50% of this SIBI here or more. Just use your fib tool and you should take profit model 1 on that. We've broken this level here, found support at it. Look for a run back down deeper into this range. So if we end up coming down to 135.43, so that would tell us that the American dollar could be heading back up for a bit. Yeah, I could see that up into here at 99.27 to 99.50. Inside that box there. See if they stay out of that, keep coming lower. It's got to trade through here now to keep coming lower so these guys can push back higher. But if that just pops up here a little bit, I should fill that fair value gap in here and start to march higher. So we're inside that level we were calling for last week. We just hit it, and we've had a little wick through it, which I like to see. So we can see one little pop up here, roll over, and then take that threshold of this down close candle and start reaching for the weekly objective down below, which means all other currencies should have more upside. So if we roll over in here, find these equal highs, new day opening gaps, and start to go higher on those. Or they're the new week opening gaps. You have 2 of those. And then run back higher. This is the event horizon between these 2. So if we use the event horizon to go lower, come back up through the event horizon, then start running higher into these upside objectives above us. We'll see how the American dollar does in this level. In this level, you're kind of stuck between these 2 right now. And you're looking for some acceleration, like wick up here, and the rest of the week just start accelerating down. Canadian dollar, come on, finally reaching for those little highs up there. Japanese yen, I want to see that get up into the buy side before the summer. We want to see silver get up and finish off our objective up here at 33.1. This would be amazing if we can get up to here. This is for support. Wait till you get a body breakout above here. We'll see where we're going. How's everybody this morning? I hope you're all doing well. How's Toronto? Is it how's the weather out there? We're all packed. Everything's good. Got a house sitter. Everything's good. still cold, is it? Wow. I think we're going up to 26 degrees today. Our temperature is supposed to get to today. It's already 11 degrees. So, yeah, 26 degrees today. Wow. By 30, it'll be 30 degrees by Friday or Thursday. See, the moment we leave, it gets nice and hot. Oof, you guys got some great weather here. Oh, see this get run out down here. That's right back to that candle's open. Not so much. I think where I'm going, it's going to get nice and warm. I'm just waiting for my last piece of my camera assembly to come through the mail, and it's supposed to come through today, right as we're going to leave. So it says it's out for delivery, but that could be any time. That could be here like later on tonight. So what do we got? 15 minute. There's our 15-minute here. Where would that put us? Oh, I was way down there. 219, 226. Yeah, we could see a run all the way down to 219, 226. Mm-hmm. Even 21, 183. All right, we got 7 more minutes. See where what kind of lift we get out of here. The voice is exceptionally radio-like this morning. Sometimes I like listening to even the sound of my own voice in the morning. It sounds so deep. Good morning, everybody. That won't last. My wife loves that in the morning. Good morning, honey. She's like, oh, I'd say that again. Good morning. Yeah, see if we can get down into here. So I'm looking for these key levels right here. If we get a little run down here, those are downside objectives. On a 5-minute chart, you're looking right over here. Let's come right down into the bottom of that already. Find support off here. See how we trade it below it right here? Trade it back into it. Extend the range. Now come back up and tap the low, or look for institutional order flow entry drill for a continuation of the downside. Touch the low. So you want to see that roll over and come down now. We could run all the way back into this level right here one more time. I want to see this fill though. This would be good to see, just to come back into this level here. Support it then. Roll over and go back lower. Even touch this low here. Or this consequent encroachment of that would be good. I'd say a 30-32 rollover right here. Watch this next couple of minutes to make a new high. Higher low, lower low, lower low, or lower high, higher high, lower lower. Look for here. We're above here now. Look for run to the premium level. Premium's done now. This hasn't been a hit yet, and neither is this. Next level above us is right here. Watch this breaker right here. See if that holds price. Get above it, find support at it. And you're going to get back through this level here to start going on. Literally closed on that high. I think I'd actually closed above it. What's the 80.50? Close is 80.75, so 0.25 above. Come back, tap it. Take that. All the highs are taken now. 15-minute consolidation. So you want to see a nice displacement, get above here, create a fair value gap above the highs, come back to that old graded response and keep going higher. Otherwise, this could just roll over and come back into here again. That's it. Give us a big punch up here. Wait for the next macro. Check out your SMT at the next macro. See, I'll kind of return to these old highs here. Like that as a buy. See the consequent encroachment of this hold. Stop loss has to go below here. This breaker to hold price so we can come all the way back into here. I don't want us to start digging all the way back down to the discount down here. So I want to see this breaker hold price here now that we run above that. Come back and use these highs as support. So I'll kind of layer in some buys here, see if we can get this to go higher. Okay, below 60%, 62%. There's small imbalance here, so I'm expecting this to trade back into that range. This small imbalance, we've traded through it. We've tapped it a bunch of times here. We're not really getting through it, so you can expect it to come back deeper into this range, up to 50%. Low here. It's 2 times moved my stop loss now because I'm thinking we could come back into here. This hasn't been hit yet, neither is that. So if this has got some intentions, I want to see it just tap these highs and get out of here and leave this all open. This has to be a breakaway gap in here. 1, 2, 3, 4. Bissies above us. I can just see too many levels to reach back for here. But I'll do a load all the way into that, and I'll take that as a one-time trade today. This whole level here, I want to see that get support. It's going to lose its love for me if we start getting below 50%. We start digging all the way back down into this breaker here. So I'll layer another one on at this breaker. Another 7 minutes. We'll see what this spooling of the next macro is. And we have what do we got here? We have no news today, so tomorrow we have durable goods. That's a medium impact news event. Otherwise, we have nothing today. Side objective. So 22,173. And I might just leave this one on and go on my trip and leave it on for a few days with an upside objective up there. See if we be bold and leave it on for a long time. See if we can get up to our upside goal. I'll put 22,173. If this starts to leave here, and we're sitting below this consolidation on the 15-minute chart, I want to see that reach much higher, 25. So yeah, that'll be 1,000 handles. Good morning, Russell. How you doing this morning? Hope you had a good weekend. I hope you had a great weekend, man. I think we've done really well here. We're up to 1,228 subscribers, I think it is now. So thank you all for joining us every morning. And for those of you who subscribe, thank you so much for your trust in us. So we're really not getting much movement out of here right now. So this would be one of those really nice on the hourly level. Look at this here. So we got this fair value gap forming above this level is what we wanted, right? So if this kind of freezes up here, and then the next hour starts with a tap of this, your graded response on the 15-minute chart, the graded response would be a nice little tap and go higher. If not, the consequent encroachment of this would be these old highs here and leave a small portion of this open for it to continue going higher. So that would be the desirable response, would be the consequent encroachment if this is the new busy here. And that would put us back to these old highs here. The next macro starts in 15 seconds. Let's see if we can get some spooling here. Here we go. Back to the breaker there. traded below this level now, so 15% in the cards. You've got a change in direction right here. So what we're looking for is the potential swing here. Now this low's been taken. I want to see that get traded through, and this. If this keeps rolling over here, look for 50% of that range. It's really strong. It should just blast right through here and just start going higher and not even bother getting down here. But if it wants to do a retracement back in there, I'm willing to let it. I'm using all these levels here and these as support to go higher. Losing more love for it the deeper it starts digging into the lower ones. This hasn't been hit, that hasn't been hit, so we could see a big retracement back into here. So you have to leave your stop loss below that last one. This was just, if we get the ideal ones, you're kind of layering in your buys. If we catch this old high or just this reversal and keep going higher, that's your like A1 setup. Keep going, then you slowly degrade down inside this range for that run higher, the higher objectives. So in other words, I want to see 930 hold price, and I want to see 10 or 1030 take that out. It will be a fair loss if I take it. But that's the objectives. You want to see hold price, these breakers. And institute, or what is that? Optimum trade entry reversals. So they could come all the way down into that 70% range, 75% range. Still go higher. Let's see what we get. So be aware that we've got the change in direction already. So we've come down through that level. We've traded back into that level for a continuation on the downside. So we're bearish right now. On a 5-minute, this order block here and this order block here, you want to see the piece of this to stay open. There's the first presentation. %62%. Last breaker. Remember we were saying you never got an opportunity off this one to go higher? Come back, get it. You may even get one more poke into this. If it trades below here, I'm on the wrong side of it. It's going to take the lows. 15-minute. We're right back into that. Consequent encroachment of the 15-minute candle. And we've almost completely filled it, so it's losing its love for me for sure. It's the last little breaker you want to see hold. So if this digs down into here, reverses and takes this candle out, this candle would be support for me. Keep coming higher. Using this first presentation, let's come back inside it. We've had a couple of wicks through. So we're kind of just stuck in there right now. Not the kind of response I want to see. I would like to see it come down, just tap that and get out of there. We're stuck inside it, not such a good thing. And we still haven't at this level here. Tap 10. So the concern now is we've had this reversal. It's changing direction here we talked about. We've come back into the range. We've come down to a level of 62%. And you want to see that react off that. And the fact that we're still sitting in here concerns me because I want to see that react off higher, right? So we have the potential now is to run through this level and take out the 930 and then do a reversal. So we'll see. If I could, I'll take a full stop on that. I want to see if this whole level, I've lost a love for this as it starts to eat through these levels. You start to lose your desire for that to go higher right now. Yeah, the mean threshold of that candle tapped. And we're underneath the first presentation as well. I'm pretty much talking myself out of this trade. I can see how it's turned already here. We're right back inside this range. I think Hadi actually caught himself a short here off this reversal, which is a smart move. Wait for the macro and then take the macro time. So that's a good trade there, Hadi, if that's the one you caught. And if you're just trading back to discount box here, going from box to box, that's a nice trade. So we'll see if we can weather this storm here. And if like I say, if we get through this on a close, I'm definitely on that. I don't even want to see a wick poking into below that. I might have to weather all of this down here to go back up again. There's your discount box now. With 75%. Yeah. He's right. Market structure shift, broke through. Take the first fair value gap, 50%, pay himself. I'm trying to catch that long. I'm married to the idea of that going long, so I had to endure all this drawdown. And this, as you can see, how the reverse, we talked about the reversal here, short, then that level gave away, then this level gave way, now this breaker is giving way, now you got this here, so you can see how it's lost its love for me to go along. So unless we go from breaker to breaker and then get a response off of this and start to go back higher before taking that low, we'll see. If not, that'll be a Tibbs 10 instead of a 9-10 turn. It'll be a 9 turn, it'll be a 10 turn. Or that'll be the 9 high for 10 continuation on the downside. And this is a 1, 2. This consequent encroachment's already been wicked through already. This has already been filled already. None of this is a good sign. And we have all this downside. So I'm pretty much talking myself out of this trade. We'll see. I've got multiple confluences that this is going definitely lower to this discount box, and we're just going to see how we act off this. We may get a saving grace here in this discount and start to move back higher. We can get back up above this first presentation of the 830 again to go higher. Great. If not, this is going to use this to go lower. But I don't mind taking a loss in front of you. I try to explain where the trade would go, and you can see where it's failing, and we'll see if it continues to work out. A good call, a D, waiting for a structure break, return back into an inversion, continuation to 50% of the range, pay yourself. Smart move, man. Good job. Got a little imbalance right here. Like I said, I wouldn't get too much excited about this until we break this structure here and use this first presentation or the 830 to go higher. And then you have to get right back through 299, 300 level to go higher. Use this to take out the candle here. This mean threshold, that one's already been taken. This one hasn't even been traded into. So what I've been looking for here is for this to refuse to come down into here. These two are dipping into the wick. This guy hasn't even finished coming up to the consequent or that rejection block yet. Right? This one's already through. That one's already through. That one's well through its mean threshold. This one here has just touched the mean threshold. This one refuses to go even down to the bottom of that candle there. So that's what I want to see is this refuse to go lower and start going higher. So that would be the stronger of the two. And then you want to see these dice respond off of here, that respond off of there, go higher. That's what I'd like to see anyway. So it's like using SMT for specific levels, like rejection blocks, half the wick. See which one holds off going to those specific levels, or if they just give way. So it's just like using, you know, when Michael talks about these specific levels inside candles, like the mean threshold, the rejection block, as you're sitting here, 50% of the wick, all that kind of stuff. So look at all three of them together and see how they're acting inside those specific points. Instead of it always being swing lows and stuff, look for it from a perspective of those specific arrays that he mentions and see which one is holding off, which one's stronger, just to see if there's some sort of correlation between those for you. Higher lows still, higher lows still. But those levels, like the low, that's what I'm looking at. And then the wick. So anyway, that's not a Michaelism. I'm just looking at that as a potential data point to look for. Don't forget, you still got this whole regular trading hour gap below you here yet. And I don't like the fact that we're taking so much time. Like here, didn't like that, don't like that. We've hit the discount box, so you want to see this really start to accelerate through here, through the 830 and through that first presentation for me. So we're above here, and we've closed above that one. So I don't want to see this get below here now. You've got a small little imbalance here. Traded above it, come back inside it. Look for the first candle to the left. Body's traded above it, come back inside it. I want to see that whole candle, whole price now, and start pushing higher. And you gotta get a market structure shift up here. No, that's not good. Nope, that's gonna come back and get me. I'm out of that. before they wicked all the way through that again. So I think that's going to roll over here now and come back deeper. So wait for a structure shift or something above here. $18.19. We're still staying inside this one, inside the breaker. Mean threshold of the 5 minutes still holding. It's the bottom of that whole range. So there's the fill of this little box right here. Some terms of a graded response. That ideal place, it would have been nice there. Too much slop. Rolled through here. Called the reversal here, but still held onto it, thinking this would hold, this would hold. It didn't. The reverse took us through the breakers. Lose your love for it. Did not respond out of there. Use this first inversion to go lower. And now we're into the discount box. So worst case scenario for that to keep going higher. So if this turns around from here and starts to go back higher now, like that's a lot to weather through if you wanted to get a nice clean run from here to go higher. Like that was an entrance. That was definitely an entry. But the failure should have been right here. Rule is if it drops below it, then expect a run in here, especially when we talked about these two levels here that hadn't been taken yet. Like didn't give you an opportunity to get in on them. So the fact that we broke through that, we talked about this as an objective, and sure enough, it's hit it. Oh well. So now if this wants to go higher, you got to wait for all this to get taken to the upside and use these two levels as support. And then you've got to get through here and here as your last upside objectives as you want to push the new high. So we'll see how we act inside here. If not, if we break through this, then look at all these objectives as I have sitting down here, which is back into your regular trading hour gap again. So if we take that level right there, or the low of this box, changing up the direction to lower for now, taking out equal lows below us. So don't marry the idea of going long now that we've lost a lot of this. Looking for this candle to get taken out to the upside here. This will be the frustrating thing now, is if it comes all the way back through here and continues to go higher. That's the bottom of the discount box. It still holds price and then takes this out, finds support, keeps coming higher, takes that level out, and you're like, ugh. Playing chicken with the train and you lost. Then it's that whole move the stop loss and not trust my levels. So bull trap would not be a trade above here. Just roll over and come down lower. We get a body through this level here now. This is the bottom of the hour. There's the 21, 27. Could give us a little swing above and then keep coming lower. 30, 32. See, trade back into this level right here. Remember, we want to get a body above 830. Now I'd like to see no more than a tap of this level here, or this mean threshold of that candle. But I like right here. Right there to there. And there to there. That's a tap of that level. Head on higher here. Let that be a little swing low there, 27. Nope, look at this one here. There's there to there. Mean threshold. That's the line in the sand for me. If you want us to keep going bullish, that rolls through here. Look for a run belt back into this 21,257. Watch where it closes, or above the mean threshold. What are they all three doing here? Hit the constant or the rejection block. These guys have been through it, drilling through it. They're both through their mean thresholds now of the or consequent encroaching of their wicks. This NQ just hasn't bent the knee yet. These two are pulling it down. We're through this now. Looking for that 257. Oh, boom. There's the 1030. Same scenario. I want to see it retrace back into here now. And then I'll go short from there. You take 2 from there. And then stop loss is going to go just above here. I don't want to see it get through this level here. So I'll take another, load another 2 on here. At that level. Now I want to see this hold and come lower. If it gets back through this level again, that's it. Yeah. Yeah, I see it at 219. Yeah, I have that as a downside objective, 219 or 230. Yeah, I see the breaker sitting right there at 219. So if I take this low here, I'll move into break even and pay myself one there. The hourly, I like to see this. See, there's the hourly busy here. This hourly breaker is at 219. We have a little busy down here. Institutional order flow into drills 233. So looking for that level. Let's use 6 a.m. to come lower. Pay myself on there. Even now. So if we can get through this level here, then look for your look for your midnight open and the midnight open range in that first fair value gap inside the midnight open. That little block there would be my next objective. We could come all the way back here and tap me out here. I'm hoping this little order block here will hold. Consequent encroachment of that. Leave that little piece open. If you're doing a take profit model 3, you don't want to see it trade back above that level. Now that you've taken a low out, you don't want to see it get back above here. I should be just a touch bit above that. If I take that low out, I'll again move to take a piece of the pie here and leave the rest on to run. Just let that rest run, see what we get out of that. I'll just monitor it with these take profit model 3. We get back through this level here, this fair value gap. We just reclaim that fair value gap at 33. I think I have it at here, 30. And we'll see what kind of response we get out of there. If we start digging into the consequent encroachment of that or the low and start to eat through that, then I'm looking for this market structure shift on the hourly using that order block to come lower. And then you're looking for this big sippy down here, if we can get through that one as well. So you're looking for a market structure break if you want to go lower. If that's just tapping that at 33, then and goes higher, you have to wait for a market structure shift if you're trading on the hourly to go higher. Either way, we've made back some of the loss we took here. See how deep, if you stayed in that one? So you've got no market structure shift. You're still in that. You're waiting for that to get taken. It didn't. Gave you a nice squeeze, bull trap, rolled over, took the low, came back to the low, continue going lower. If you followed the rules to the letter, that would have been your short. I was way married to that long. And there's your first indication that there's a trouble in the relationship. You go through the breaker. There's the first big argument you're having. Then you come back through, yet another big blowout. Then another big blowout. Then the love of the relationship dies, and you get through the discount, and then you're looking for a lawyer. She takes the rest of the house right there. So yeah, that relationship, you could see it failing from a mile away. That was one of your ones your friends were telling you. And he's like, Darren, this relationship's not going to work. So watch that level right here now. Literally came back at just under that 50% of that wick. That must have hit almost 50% of that wick there. How close was I? It's just above 50 there. Oh, I was right on 50. It came to 25% of it. So you want to see a tap of that level right there. It looks like we're there, but we're not quite there yet. What's the low of that candle right there? 20 or 231. What do we hit here? 232. So we had one more handle. So 231 would be right there. I'll never look at price action the same way. It's the divorce. And you know when you're having the arguments, Brian, you know when you're failing, you're like, wait a second. She was beautiful when I first saw her, but without her makeup, with their cool-hearted woman. No, we can't. We're not blaming women. I'm just talking about it's a bad relationship. You knew it was starting to fail here, but you stayed in it anyway, hoping it would sort itself out. I know I don't want to. I don't want to say that women are cruel. That's terrible. I got a lovely wife. I didn't even want to look at women that way. That's terrible. Anyway, not a good relationship. That's we're looking at it that way. And you can see this give you hallmark signs. All your friends telling you, yeah, it's not working out that way. Hadi was trying to tell me right here that, hey, look, I took a short there. I don't know why you're going long, Darren, but I'm taking a short. But Hadi, she understands me. No, man, she doesn't know you. That's funny. So looking for that Bissy breaker. So that breaker high, if you're going to come back and tap it, will be just popping through this Bissy, and it will give you that little tap on that breaker high there. So looking for signs of reversal here, 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 here. So there's like 6 different levels I'd be looking for inside the high, the consequent encroachment, the low, which is the high here, its body's close, and then the mean threshold. Those are all different levels you'd look for, and those are the ones I've marked on the way down here. This first one here is this level. Then you're looking for consequent encroachment, which I didn't mark here and here. This one is right here. The mean threshold would be right. Where did I put this one then? This one should be right there. And if you're looking at this regular trading hour gap, it's quite huge. So I don't want to see that high get taken again now. We've traded back up, worked into here, and I don't want to see that get traded through again. You want to see this just kind of peter out here and go down lower now. And sometimes it's just recognizing that you got to get in sync and you got to just say to yourself, look, I'm willing to take the loss here. Instead of running all the way through here, if it ends up being a really bad scenario, then just take a small loss here, get short. You can get your money back just in that little trade right there. I could have got that back. But that's when you think you got to trust. I kept saying to myself, just trust your levels. Yeah, you should just trust your levels. And if it fails, wait. Just say, okay, this I don't even like having these multiple candles. So my first rule of multiple candles getting broken, we already saw, I talked about this level here getting taken multiple times, wasn't getting through it. Then that level got taken, came back inside it, did not break out the high again. So early signs, things weren't going to work out. So you see, you just saw a great example of marrying a trade long when it showed you clear signs that it's reversing and it's failing all the way through here. It fails. Then you get back in sync with it and say, no, I got to go lower from that level. And now we're looking for the first sign of this relationship, or this relationship in terms of the price leg down. This price leg here and the next price leg down would put us right into, we look at this price leg from here to here, or I guess you could go to here and then look for the next one down. Look where it puts us, right on that level that we're looking for right here. So I'll take one more off right there at that top of the Bissy and then see if the rest runs. So that would be the conclusion of that price leg. And then what is your SMT showing you here? Nothing yet. Lows taken, lows taken, lows taken. Lower lows, and lower lows. Difference is this low hasn't been taken yet. This one has, and so is this one. So failure to take out the last candle's low. This one, I don't know what's the low on that. 87.55. Yeah, it did take it out. Take it out. All right, they can all charge away now. The takes that low. I'll get one more off there. Trade here. $13 seconds. Now we're just going to wait for a cleaner setup. Too much waffling for me now. We're above that level. Come back, give it a little tap. You want to see it get back through here. A little structure shift here. Start getting back into that range. Equal lows. I don't think they're going to leave those untouched. And we haven't touched this Fair Valley Gap busy down here below us, so I still think it's coming lower. We're tapping inside that box now. I want to see that come higher from there. If we get below it again, then run for the lows. Otherwise, slightly bullish right now. All the time we're above that little inversion. Rejection block. Look for 239 to see if that holds. You want to see a little piece of this stay open. If it comes back and fills it and takes out the mean threshold, then run for the low. For this to provide support through there. So for specific data points, I'm looking for the mean threshold and this opening, and I'm looking for this high and that low inside that fair value gap. And the consequent encroachment, obviously, when you're in these consolidations, those data points are really small. So watch where the wicks end up. See where they're tapping. Are they tapping these levels clean, reacting off of them? So you have 1, 2 levels right here, 1, 2, 3 levels there. Got that one there. And ran right through it. Okay, there's the 31. Now we're looking for the top of this level right here, 2, 2, 3. So that will put us right into 2, 2, 3 and the body of 219. So we closed right below that level. Right in here, opened and shot straight through it. They're interesting little data points, like specific levels, right? You're looking for. And literally opened and closed on that, and then boom, shot through. Looking for our discounts now, looking for that 219. Hadi, you keep rejecting or retracting all your messages. Don't be afraid to get in there, man, and be wrong. I've been wrong already this morning. You saw me marry a trade I shouldn't have married. Clearly gave you signals that it was going wrong. And yeah, don't be afraid to say something wrong. It's all good, man. We're all here learning. So here's that BISI we're looking for. Now, how are we going to act inside here? Consequent encroachment, which would put you right there at 228, right on what we're bouncing off of right now, 228. And then the bottom or the high of the next candle is whatever this one is here. We're looking at that at a high of 221.75. 221.75 will put you right in here. Then the body open of this candle is 219.50. So right on that red line there. So don't forget we're heading to this breaker here. So I'd like to see at least tap of that at 221, whatever that high is there. So the high is 220. So I'd like to see it hit this right in that little puppy right there, all the way down to its close, which is 21,207, which puts us right into that little objective we were talking about this morning earlier as a downside reach, which is that whole midnight open range, midnight open and the midnight open first fair value gap. All that big cluster right below you, lining up with order block breaker, that breaker right there that takes out these little highs, last down close swing that takes out the highs, that breaker, this breaker, they overlap, fair value gap. So I'm looking for any opportunity to see a reversal here. I think my phone's ringing out. Looking for that 219 again. So you're looking for inside this range right here in this consolidation. This would be equivalent to a CAM model 1, 2, and 3 right here. So what you want to see is this dip down, come back up, take out market structure here, and there's an inversion sitting right here. Come back into that inversion, hold high, and then continue pushing higher. That would be the reversal. A safer reversal, because then you got the potential bear trap. If it just trades back up into this level, you want to see the market structure shift with the inversion to go higher. Is that the one you're looking at too, Hadi? So we're coming back into this old high here. 219 is what we're looking for, a tap on that breaker. A nice response off of that would be a tap that level. And this is where you start to look for any opportunities to see a reversal. Here, 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 here. All those key levels. And the mean threshold of that candle will put you right back at this breaker's close. There's the 219. So you just as they start to come down into these levels, if you did get short up here, or you did get short off of here when we were talking about it, you'd still be in that, and you're just waiting for any chance to say, here's the key levels I'd like to see price react at. And if I see a reaction off of that to go back higher, I can take my short trade off. And that's clearly something I'm trying to work on as well. Is once you see it changing direction, get out of your trade, man. Don't try to marry a trade long. All that profits or all that loss you're willing to endure just for the sake of, we saw the reversals, 2 reversals early. Now, if you're using a take profit model 3, you've got no structure break, no structure break. So that was that bull trap we were talking about that you could potentially run into, and sure enough it did. We still got no reversal, still have no reversal, still have no reversal. So you're still in that all the way from up here. Nothing is, if you follow the rules perfectly, you'd still be in that trade short. Pay yourself at specific lows, or just wait for a take profit model 3 to show itself and close out your trade, move to the sidelines, and wait for, that should be the next reversal. If you catch the take profit model 3, works out with all the rules, you should get a nice reversal at the same place. So you'll get it all the way down to start going all the way back up again. So now we've hit the key level we're looking for. We've hit this level. This breaker and that breaker have both been hit now. So now you want to say, do we have sensitivity at that level? And we're going to see a reaction off of that? Or are we still going to come lower? Now we see 62% of the retracement from 1030. It's 11 o'clock now. So you'd expect to see a change in direction here. There's a change tap. There's the first one. Let's get a market structure shift here. I'd like to see that finally take out this high here before going higher. tap it and go higher. Let's go. Because this last candle occupies this inversion or this fair value gap here right now, you got to use the mean threshold. If we close below that, look for lower prices. See how we'll open and close right on it? Going lower. Rejection. Mean threshold. Or consequent encroachment. Equal lows. Small little things. If you're just trying to stay out on a 1 minute chart, look for those specific levels all the time and see what kind of reactions you get at each one of them. See how we just rip right through that? So looking for this to go lower through here and touch that big cluster of stuff we've been talking about, the open range highs or the open range at midnight. Yeah, I'd like to see it react off of here too, Hoodie. But don't forget, we can come all the way down into the mean threshold of this. And if you lose that, then from a graded response, that's your A plus right there. We're losing that already. We're already back into this one. So the next one is the bigger breaker and that little guy. If we lose that, then looking for the mean threshold of this. And if you lose that, then we're looking for, forget that whole noise, look for a run back into that whole level. Because don't forget, we haven't had an opportunity to use it. Much like here, this is a good example of the same thing. See how we ran through that level and we didn't get a chance to tap it. We ran through that level, didn't get a chance to tap it. Then when it started coming back, like it's doing here, if it starts to come back and it breaks through this level, which is equivalent to this little level right here, if we're looking at it from an analysis perspective, if we close through that level like this and come back into it, that's like the observation we made on the 1 minute chart. And I'm saying, and then even up here, I was saying we could still run all the way back to this level that wasn't touched and even get, we do not want to see it get back into there. And clearly it said, oh yeah, well, that's where I'm headed, box to box. So if we get through box to box, this is the discount. So if we start eating through that mean threshold of that candle and the mean threshold of this breaker, then look for a return back into this because we never got a chance to tap it, which is right here. Finally comes through and hits it. And then if we get through that, like this level here, we trade through it on the downside, come back into it, look for lower prices. Same kind of thing repeated here. If we get through way down here, now I'm not saying it's going to get there, but if it did, we trade through it, come back into it, right at a 4-hour inversion as well. Down you go. You're heading for the lows here, right? And we're denied that high. But until then, we have this change in direction. We have traded above it. We've come back into the mean threshold of this candle. The wicks did some damage. The bodies are stuck on that mean threshold. Ran through this level. We've got to get through that on a close now and take this structure break. I want to see it get through here as well. So I want to see all of this get taken first and use this as support. Otherwise, it's just box to box. This little order block here, that's the resistance. Resistance. There's the mean threshold. Holding it. We'll see if this holds now. If we pop through that, look for lower prices still. D, why do you call that a change in direction? I call it a change in direction because as soon as you see this fair value gap get taken to the upside, we're expecting to see it have support. So it now says I'm changing direction to go higher. So I use this fair value gap that becomes inversion as a change in direction. And as you can see here, trades through it on a close, comes back into it, and then changes direction. It's like here. Here, changes direction. Instead of going higher, it changes direction right there, comes back into it, and we continue going lower. That's why we were talking about this here, saying it's changed direction on us already. So it's already telling me it's going to go lower. Same with this one here, right? It's already telling me it wants to go higher from here. And how far up inside that range it goes, if it doesn't really matter right now. It's just telling me it's changing direction inside a small range. So where's the upside objective? Well, that mean threshold, I want to see that give way, because there's no reversal there except for in here, this little imbalance, and this all the way from here all the way up to here. We could get a retracement into that, and it could roll over and come back down below us again. So if it gets through this level, comes back into it, it's going to continue coming lower. So that becomes an inversion for me. That's why I call that a change in direction, if that helps. You like to see the high get taken out. Well, that's a swing reversal. This is just a reverse in direction, change in direction. Doesn't necessarily mean to say it's going to go higher, like take out the highs. But when you get a change in direction versus a swing reversal, when it takes out a market structure shift and comes back and finds support at that level, now we've got a swing reversal. Now we've got a higher likelihood of going to a deeper part of a higher range. So there's nothing wrong with your analysis there, Jean-Paul. So when I say change direction, doesn't mean to say we're going to go ripping higher way up here. We're just inside this small little range here, or this little swing high to this low. We change direction, coming back, and there is something you can hunt for in terms of a premium array. Well, there's nothing here, so the highest premium array is here. So if I was hunting for box to box trading, I'd go from here to here, right? But you got to get through that order block. Now, if these were all just down close candles, that would be a nicer one to run for. But when you got that little sharp piece of rock in the sand that you're going to step on and go, ouch, and then it's going to reverse on you and come back lower, that's the rock in the sand. You got to get through that on a close. That one we opened on it, good. So that's a better sign that that wants to go higher now. I want to look at this order block here, and I don't want to see the mean threshold of this give way. You've closed above this imbalance right there, and then we opened, come back. I want to see this hold price and that mean threshold, and that continue coming higher. So change in direction, back up into the next level. I want to see that get taken through, use that as support to go higher, and use that order block there as a ledge to step on to push for the premium box up in here now. So we'll just see if that works. And again, where does that fail for you? Mean threshold, and we start to close back below here, then we're changing direction and coming back lower again. But right now we're bullish inside this range. That's how I see it anyway. So you got to know where your theory fails, right? You got to know where it fails. We knew where it failed, but still, you got to see a great example for Hadi. That helped to reinforce for Hadi's belief that no, that's a market structure shift with a inversion. I'm going to take that. I don't care if you're going long on that, Darren. That's not the rule for me, is I'm taking that. So A, that helped to reinforce for Hadi that he was right on the money, and B, it helped to reinforce for you guys. That's what happens when you marry a trade like I did. I married that one long all the time, giving you the indication that we're failing all the way down. So that's good for Hadi, and good for all of you to see a failed trade explained why it's failing before I finally went, it's going lower, and finally got out with a sizable loss. We got to change in direction again up here. Mean threshold, we want to see that hold price keep pushing higher. So again, where does it fail for you? In this small range right there. It fails if we close below that, and then we're looking for a run back into this stuff down here still. And if you're looking for this range that you're in from this swing high to this swing low, you're right up in the premium portion of it already. So if all we're doing is coming back to re-engage this SIBI again, and then roll over and come back lower, that fair value gap, then we want to see this level here give way. So a small change in direction inside this range here. So discount. Look at this. I just want to point this out to you just so you don't think that I'm just constantly form fitting this stuff. So we saw the change in direction right here. So let's say you got long right there. Stop loss is sitting here. And you want to go to a premium level. So as soon as it hits 50%, if you're using take profit model 1 model, take half your trade off, move your stop loss now to break even. It's a zero stress trade. Pay yourself at 62, pay yourself at 70, 75, comes back to 70, you're out of the trade. Done. Wait for market structure shift now. All you do is just get a run inside that range. So a small little run, following the rules to the T, you'll pay yourself right on 75, you'll be out at 70. You would have gone boop, boop, tap you and you're out. Then you wait for market structure shift, premium box on the next level. If you left a piece on to run higher, that's where your objective is right there. So you can see, Jean-Paul, how this is a change in direction. That order block, we want to see that give way. It finally gives way right here. We bust through it. Now I'd like to see it come back, find some support at its high before reaching that level there. If it's got intention, it'll just run straight through it, straight for it. Anyway, that's how I look at it. There's the first level of the premium. Market structure shift, sure. Also, you look at market structure shift as a change in direction that we call a change in direction. We look at a market structure shift as when it breaks a swing high. Then we have a market structure shift along with, I think Michael looks at that as a market structure shift as when it breaks an old high as well. Doesn't matter. Whatever your definition is, whatever works for you. I'm starting to get less anal over the definitions of stuff when I just start to look at specific data points and say, this area here is what I'm looking at as an area of sensitivity. This is what I'm looking at for an area of sensitivity. What you want to call it, I'm not going to crack eggs over split hairs and all that kind of stuff over specific names you want to call it. Just look for those areas. Whatever you call it, then call it that. So looking for this premium box here to give way so I can look for this market structure shift, break in structure, come back, find supported here, and then we'll look for that to go higher. And that's at 11 o'clock. We're looking for a 50 to 62% retracement at 11 o'clock. So here's a nice little example of a change in direction at 11 o'clock and giving us market structure shift now. Then it gives me more confidence to run into a higher range. So there's the premium box now hit, nailed completely. Box to box trade works out nicely. D took a partial, good for you. Yep, nothing wrong with that, Jean-Paul. Good for you, man. Nothing wrong with that at all. If you're a super sniper, you're looking for those small little runs inside the range. That's what you're looking for. If you're looking for bigger runs, you want to see a structure shift with it. So I would like to see this here now. If that holds price and we come back into the range, look for this candle here. And then I want to see a reaction off of that and then take this out above us, structure shift, and then start moving higher. So I'm still looking at that level right there. Good for you, Hadi. Good for you, man. If you're going to go long now, if you're going to look for those specific levels we talked about, there's that level, the first opportunity you see to go for that long off of a higher time frame resistance, a place you're looking for resistance, which is that fill of that fair value gap that we mentioned there. So all those key levels that we talked about on the way down, you're looking for any opportunity to see a reversal, which is what you see right here. So now you want to see, I'm just waiting for the structure break, so then I can use this as inversion to keep going higher now to run for this high and those old highs up there. Or take profit model 3. So as soon as you see that, an opportunity to see that reversal again. So if you're going short, I mean, we talked about how if you see that SIBI get taken out on the downside, which it does right here, then that long trade is off here and a short trade is off there, and your long trade is on here. Or if you want to wait for something a little more stable, wait for something to break above there. Oh, you're very welcome, Jean-Paul. I like the way you've got you wait for specific levels. I am super impatient. I battle with impatience and impulsiveness all the time. All the time. And you see, there's lots of trades you see me take that, you know, Darren, you could have waited just a few more seconds for that, would have been more perfect for you. But I battle with impulsivity all the time. All the time. I can call these things like perfection, but then I can call when it is changing direction, but that impulsiveness, I still battle with that. I'm trying to wrestle with that making quick decisions and just jumping on. That's what I like. I'm going to take it. And it's the paramedic side of me. If I see something that this person needs help right now, I'm not going to sit there and wait. I know what the direction I want to go. And when it's turning on me, I got to make a decision quickly. So in the markets here, you got to be a little more flexible and more rigid with your rules. So anyway, I like what you're doing, Jean-Paul. Just keep sticking with it, buddy. Waiting for this level now. So this is like the cat. I'm looking at that laser beam on the wall and I want to pounce on it, right? So far it's hitting exactly what we're looking for. Now we're looking for this level here and these highs here. So watch how this closes here. And I want to see a fair value gap. Ideally a fair value gap above here, above the high is stellar for me. Hit perfectly off of a data point. It is a data point. We've closed above. Now come back, give it a kiss. I'll take 2 there, right off that high. Now I do not want to see us get below here. This and that. We've traded above it now. I want to see that hold price. I'll even take another. I was going to take another 2 right there. But that's a nice little long right there. Coming back into that level. Now I just want to see that run. Come back in there one more time. I'll add some more to that. I'll take another 2 there. All right, now let's see if we can just leave it alone now. This is my, like, I want to take out a portion. So I would typically take profit model 1 in here. If you're doing an internal range liquidity hunt, right? You take out 50% is right there, right? So you pay yourself half there. Well, we just got in below 50%. So 62% move to here to 50. Move yourself to break even, 0 stress. You want to get into a 0 stress trade. As soon as that hits 62, take a portion of your trade out, move yourself to 50%, and let the rest buck, man. Let it ride. Remember, 11 o'clock, you get 50 to 62% of the range created between 9:30 and then, so 50% will put you right in here into the consequent encroachment of this old SIBI here. Just move that to break even. Actually, I got to stay below here. Just going to see if we can let this run now for the rest of the day. It's a nice trade, man. It is indeed. Let's see if we can I want to see us get above this level and we're into this right there. So the potential is for it to bounce off of here and come back down lower again. I want to see us eat through this candle right here. This down close, that's nice. I want to see that just charge right through here now. Get up on top of this. Then we get our bull trap out of the way. If we can get straight through that without stepping on the plate, up we go. Right from the inversion to the SIBI. Yep. That's the structure break we were looking for. That was the change in direction. Market structure shift. Closed above. Come back. Use this level for support. We talked about that before that even got there. Perfectly a little run. Either take the high or the first inversion. And you continue to push higher. Right at a time where, Hadi, when you caught this one on the reversal at 11 o'clock, this is where you got to trust that you're going to just let it run for the 50 to 62% of that whole range, right? So you got to see some good learning today. For some, I can't even get that out of there. How do I get my trade out of there now? Oh yeah, that's what I want. want to try and grab that. There you go. Again, we want to see us eat through this level. If we can get back on top of here, I'm much happier to see that go longer of 265. There you go. Now it's a zero stress trade. You're completely out now. Okay. So again, now you're going to say to yourself, do you use a 50%? Take a portion of your trade off. So let's take one off of there. What the hell? Let's pay ourselves. So we pay ourselves there. That's 50% of that big range already. So from 11 o'clock, 50 to 62%, follow the rules. If we can get through this level here, I'd be happier to hold that, excuse me, long term. So that's 265. We can get through 265 on a close and come back and use 265 all the way back inside this inversion fair value gap. That would be awesome to see that push for, can we break structure above this high now? So structure break, go higher, structure break, go higher. And then we're looking for right up in here. Box to box would be delicious if we can get back up into that big mess up there again. And if we can get through that level, well then, we are back on track for our upside objective. And we'll just try and let this run for the rest of the day now. And here's where I've got to try and control my impulsivity now and just say, as soon as I see a take profit model 3 reverse, come back in, because 12 o'clock's notorious for coming all the way back here, taking this lot out, and you go, ugh, I only made 150 bucks out of that. So, well, plus we already paid ourselves, so. Let's see how long it goes. This could be just the run for the rest of the day now, all the way higher through all of this. And then you'll be happy that you caught it right off that perfect spot for structure shift. Yeah, I agree. I'm going to at least leave a piece on there. I paid myself once, so it's not a total loss. Thanks, Liquid. Let's see if we could I'll just see if I can hold it now. My poor wife's out there cutting the lawn. I'm in here reading candles. We're trying to mow the lawn. She has to have the house has to look perfect before we go away, and someone's coming in to stay at the house. So you got this. She wants it all to look beautiful, even when she's not around. Because if someone's coming to stay here, then she wants to make sure that the place looks great. She's so amazing. I'm in here staring at candles. So let's just review what we talked about here, because I woke up with this, was it yesterday or this morning? I can't remember now. I think it was yesterday. I woke up with this idea that if we focus on higher time frame objectives, and you see that we see looking for those specific levels to give way, right? We talked about the high of the breaker. We talked about the low of the SIBI or the BISI here. And we talked about the mean threshold of this candle. It's high, it's open, all those key levels. And then we look for the first opportunity when time and price supports that level to turn there. And then we look for our key response. And we talked about this as it was happening. It was like 11 o'clock reversal at a key level on a higher time frame to catch a long and then you got to trust it. So you may say, well, you know what? I don't trust it. I'm going to wait for a market structure shift. So then if you get that, now you say, all right, now I'm back in sync. I like that fact that that held price, that BISI held price, that order block, breaker held price, this breaker, double breaker overlap, they held price. Now I want to see if this high can get taken. So rejection block at 280, and then eat through the 25, 50% of the wick. If we can get through that, then we're looking for old highs here. We're looking for 50% of this wick, old high, and then my BISI up here, my upside hourly box to box. If you're looking for a box to box run, we didn't get a box here. That's the fear that if we come down from box, finally react off of that and come through, we can come up into box here. So if we want to find support at this, then you want to just go from support to box up here. And then when we react off of here, you want to see if we get a reaction out of that. So anyway, back to my idea. The idea is that if you find that key level, do we have confluence on all the levels all the way down? Does the 15-minute show you that? So let's go to the 15-minute. Do we have a reversal on the 15-minute? Well, we're just getting it now. We have a little imbalance right here. We traded through it. You didn't get a chance to get into it. We traded through it here. If we close above that and come back and tap that all the way down to here, that would come back and take me out if we filled this whole thing in again on a 15-minute level into that little imbalance there. So I want to go all the way up to here because I don't want to see that imbalance give way. So I'm going to go to the bottom of this here, right there. If I lose that on the close, that is the same as what we talked about over here, right here. We trade through it, and then the next one, trade through it. How many times do you want to get confirmation that you're trading back into this range again? And what can we reach back for? A 15-minute right here. Is it an imbalance there in that 15-minute? So we can literally close above that, come all the way back into here. So those are the things you have to kind of take into consideration, that we don't have a confirmation on a 15-minute yet to solidify this run higher, and we don't have it on a 5-minute. We haven't got a 5-minute. 5 minutes just happening now. You see that? There's the confirmation we traded above it, so we're coming back into it now. So I don't want to see us trade all the way back down to the bottom of that. So on a 1-minute level, I don't want to see that level get taken. So we just got taken now. So I'm going to close that out. I'm going to take my trade, and I'm going to move to the side because that's been taken. And now I want to see if we get that 5 and 15-minute reversal and then catch that, which is a return back into this consolidation. CAM Model 1 would give me a nice 5-minute and a 15-minute reversal for continuation. And now if it trades through this level on the upside, I'll get back in sync with it and say it's not coming back there for now. It's going to keep going higher. You just get back in sync with it. It's right up in the premium range, so I've got to give myself some profit there. Anyway, that's the explanation for that. You see how I talk myself out of going on that long already? Staying in that longer period of time. Did not close below it, but it put a wick below it. That's enough to scare me out. So you can see how the evolution, stick around here for a few more years, you'll see the evolution of me getting out of some terrible habits years and years ago. Yeah, Brian, that's what we were kind of looking for, right? Is that I was looking for this here, but as soon as you see that you have to stick with, I can't marry the idea that it's going to go there any more than I could have married the first idea of it going longer earlier. As soon as you see that change in direction, you have to go, I am 51% biased on a bull now, and I'm not going to get my objective, right? I did hit the objective that I was looking for on the higher time frame, but this one down here, you didn't get it. You got to change in direction. So until that gets taken out on the downside, that is no longer, and even though it's the stop, the finish line is right in your grasp, and you just go, nope, I passed out. and they took me back to the hospital. You didn't get the finish line, right? This one, you just ran over this finish line, and then it gave you the change in direction, because that's the higher time frame objective that we were looking for, each one of those on the way down. So again, because we're in the premium portion of this huge range here, and we have not had an opportunity to come back into, I guess we did right here. We've got this stuff. Yeah. We have. Those have been hit happily. Yes, they've all been hit. So that can just keep going now. Get back in sync with it once it breaks that high. It's like doing this one again. Once it breaks that high, comes back into it, then we can get back in sync and say, yeah, it's still going to keep going higher on us. So that's what we're looking for here. And don't beat yourself up if you say, oh, I got out early. Well, the rule is if a body breaks that, not a wick. I saw a wick. I was like, ah, panic. Get out. That's my own demons I have to battle. Follow your rules, man. Follow your rules. Yeah, thanks, Liquid. It's a challenge, I tell you. Just because you can call like perfect levels or call reversals and changes in direction and stuff, the next level is getting through here. It really is. The toughest part of trading will always be this, not that. This stuff, after a while, it gets easier to read. And when it cleans up, it becomes very easy to read. The next part is getting through your greed, getting through fear, getting through fear of missing out, all that stuff. And that is your greatest weapon when you get that under control. Like you watch Hadi, man, the guy is he knows the rules, and he is so well disciplined with his rules and his executions, and he's happy with the 50% of the range. He'll take a profit out, and he's happy with that. Doesn't matter if it goes higher. He just goes, well, I'm excited, man. I'll just wait for my next opportunity. He looks at constant opportunities coming his way, and if they meet his rules, he takes them. And that's why he's so successful at doing that. And you'll see me many times much more impulsive now that I'm trading more in front of you guys. Impulsive on my trades. And I catch it a little too early. Or I do not acknowledge that even though I'm explaining it to you, like you shouldn't be in this trade. And then, for example, that one we did this morning, it reversed direction on us. I was explaining it, even when it was doing this, I was explaining it reverse. And then I started looking for all the reasons to hold on to it, when I should just say, look, change in direction, man. Get out. Take that small loss. Don't worry about it. Get back in sync. Yeah, you just got to try and, once you get back in sync with it again, get back into your trade and say, look, man, whatever losses I took, that's in the past, man. That's the sand through the hourglass. Don't worry, that's all past. That's your life. Don't worry about your problems in the past. Focus on the now. Get back in sync with the market and stop letting that past act on your future and your present, because all you can act on is this candle right here. When it's finished, then you can make your decision. Not all the shit that went wrong over here. Just get back in sync with the market, man. You got to trust it. Trust it. Wicks can get pretty big, though. Yes, they can. Micro time's coming. Thank you, Darren. You're welcome, Hadi. Respect, my man. Lots of respect for you, my friend. If it is not an easy trade, it is not a trade you want to be in. I like that, Jean-Paul. Thank you, Hounds. I'm getting excited now. I keep telling my wife, like, Africa is going to be like, I keep picturing it being like going to the zoo. You just sit in a truck and you see the creatures on the other side of the bars. It's going to be a different thing when you're sitting in a wide open Jeep and there's no bars between you and them huge wild creatures that are a hell of a lot bigger than the ones inside the zoo. So I'll post some videos and stuff there too, so you guys can see. I'll put it in the community on the Instagram or on the YouTube here. I'll put it in the community, a couple of videos of what Africa and our 360 camera underneath the balloon. I can't wait to put it on the balloon, and yeah, it's going to be cool. We're going to rise up in this balloon at 5:30 in the morning, catch the sunrise. I'll have my 360 camera going like crazy on that, so I'll show you guys what that looks like. When I come back, I'll post it on there. So you see how this level here, it gives way, and then we come back, find support at the old high, break this structure here, come back, find support at that. That is found support. You keep going higher, find support. That order block there is broken to the upside. Come back, find support at it. So for me, there's no reason for it to come back into here right now. There's just more inclination for this to keep going higher. Had they not, if they just ripped through them, then I'd say, yeah, chances are we might come back to this CAM Model 1 entry here. But right now, they all look like they're tagging those points and using them to go higher, tagging it to go higher. So this level we talked about over here, right there, that one, watch. See how we came up to it, hit it, just started rolling through it, come back into the consequent encroachment, hit it, hit it, hit it, and now we're out of it. And now you're looking for this to break market structure to the upside here. 830, use Hadid's 830 now as support to continue going higher. We also have the inversion, or sorry, the first presentation fair value gap as well. If we can get above that, use that and Hadid's candle to push for the premium box above us. Then you've got a sweet box to premium box way up here. If you have the cojones to wait, if I could have just waited a little longer. You see, we're getting there, guys. We're getting there. Wait a little longer to that premium box. And if you get out of that premium box, now if I do the take profit model 3, that right there, like I was talking about, the psych candle, I call that the psych candle. When it comes back and it forms and you go, psych, it takes you out. And then it was, thank you for getting out of your trade. Now I'm going to continue going higher. We did not get a body through there. So don't act inside the candle. Wait for it to finish. When it closed up here. I would have been like, oh, I overreacted. So again, things to learn. Good things. That's why we're here, man. You're not going to see a perfect internet trader, but you're going to see people, someone I'll explain to you where I went wrong and why I went wrong at that level. And if that helps you learn just as much as the successes, I hope the losses help you learn as well, because I'll explain exactly where I went wrong and why I went wrong, what's going on inside my head, all that kind of stuff, so you guys can get the benefit of both sides and not always just get somebody who's giving you big winners all the time. The last bus is here. Thanks for the liquidity candle. You're welcome. I would rather have money in my pocket and watch it run. True. Rather pay yourself and then let you. That's a good analogy, Jean-Paul. Well, it's better to have a pocket full of cash and go, look at it go. I'm glad I took my piece out of it. You know, that's having regret of something. That's like saying, oh, it'll never come back. I'll never get that again. Oh, woe is me. Dream a big dream, right? No, these setups are happening every day. And we're on a 1 minute chart, so chances are they're going to come to us pretty regularly. You're going to see them like many times in a day. You'll see opportunities, so don't panic. They're there. So we're just waiting for market structure shift again above here now, and using this and this as our key levels to keep going higher. So ask yourself now, Where would it fail? The first question you want to ask yourself is, where do I get in now? Obviously above this level. And like in this breaker here that took out that low, I want to see this get supported now by this candle. So what's sitting around that level that supports this breaker once it gets taken to the upside? Well, the 830 and the open range, or the first fair value gap open right to the top of it. You see that there? So if we pop through here on a close, come back anywhere inside here to catch this, stop loss would be just one tick below the low of that breaker, because you want that breaker to hold and its mean threshold. And I like that. You're going to hear me say this many times. The mean threshold of both candles, or the last candle, is the most important for me. I don't want to see that mean threshold get taken. Therefore, these two order blocks here, you want to see them act like propulsion and start pushing higher. So you want to see a body get above them, come back, give them a tap. Their opens a tap, no more than the mean threshold, and keep pushing higher. If you're looking at it from a minute by minute and specific data points, you want to see those hold, like right there. See how the bodies are? Just tap it and go. Leave from there. You don't want to see the mean threshold give way. Otherwise, imbalance right here, and then market structure shift below us. And I don't want to see that. I just want to see this keep coming up. Climb up above here. We want to see what it's like down there, where you actually allowed to go up in a hot air balloon. Yes, we're going to go up in a hot air balloon at 5:30 in the morning, and then fly for an hour, then come back down. It's going to fly over the savannah to catch the sunrise. I'll tell you, it's going to be a beautiful thing, man. So excited. Wicked all the way through there. Body right on the mean threshold. See that? Didn't like the wick getting through there, but that little level we talked about right there, look at that. Tap it. Open on the mean threshold. Keep coming. Keep coming. Let's go, Hadi. Let's get this, man. Indeed, my friend, indeed. Can you scan a 15-second chart for me? I certainly can, my friend. I certainly can. Oh, my goodness. Look at that Ginsu. Choppy chop. Immediate rebalance. We came all the way back into the immediate rebalance right here. Tap it. Keep coming higher. You get through that premium box. Come back inside. Anywhere inside here. Stay in that to go higher. So you don't want to see it get through that little piece right there, which is also that 15-second first fair value gap. Now that you've got through it, you want to find support at it now and start going higher. You don't want to see it come back through the bottom of this 15-second first reversal. So right there is where you want to see that stop. Oh, there's another one right here at 271.25. That's it. This one will be great. 271.25 is the lowest part. You don't want to see that break there, and you don't want to see structure break. If we get through here, then you just go. You got to wait. You got to wait for something to break above you. See, you're already through it already. Now we use this for support. Roll over and come lower. If you can get back through that level there, I guess it would be this one here. 1, 2, and use that for support to go higher. Now that we've closed below here, we could come all the way up into here, roll over, and come back down now. Now come back and tap this level. Come lower. Take out, if we take out that low or the mean threshold of this wick, look for it to come lower. If we can get back above this level on a close, this would be just a rejection block grab. Stay above that on a close for the next 7 seconds. And then you want to see it get above here. 273. Get up there. There, good. Get above this one now on a close. Good. Now get back up on top of that. Once you use this level of support now, you want to see this support price and keep pushing higher. Let's get back to our 1 minute. Just banging off of 830. Come on, Adi. Let's get in there. It's just teasing us, man. But I like the fact that body now got above that candle there. Come back, find support at it. Right there. Look at that. Ooh, delish. That's a long. It's a very scary short kind of long, but wait for a body to get above here. And use 830 to go higher. That could still be one of those bull traps. I don't think so, but I think it could be a bull trap if you're not careful. If that doesn't, you don't get a body above here and it rolls over and you go, damn, I thought that was going to go higher. Wait for the rule. Follow the rules. I'm not at my desktop for this session, so thank you, Darren. Appreciate that. Can you scan? Just want to see if it's more clear within this tough area. No, that was pretty sloppy in there as well. Like that one, look at that 15-second chart. It's all over. See, we come back into this level right here. Look at that schmuck right to the very bottom of it. So you go through the premium all the way down to the discount, ripped all the way through to it. Now you want to get back above this level here at 274 on a close to go higher. Otherwise, you would get through here. Bull trap. So far, that bull trap is setting itself up right here. If this reverses and comes back on you for lunchtime now, we're hitting 12 o'clock. This would be the time to screw with your head. We have a wick taking out the highs. No bodies got up there yet. Now, if this changes direction on you, you'll know why the bull trap is so dangerous, so tempting for people to go higher. Remember, look, Hadi was going, I want to see it close above 830. Look at that, literally smacking on it. Not closing above it, not closing above the old highs, just giving you a wick to grab the liquidity. Now, if that just rips through all of this down here and you just go, man, that would suck if that came all the way back down to discount boxes down here. So until you see a nice pump through there and use this whole area in here as support, don't bite. So if you like what we're doing, again, hit the thumbs up button. I appreciate it. It helps us out, helps out the channel a little bit. And I know it's a big deal for some people, but if you hit the thumbs up, I appreciate it. If you're new to our channel, by all means, subscribe. We're here every day. Not for a little while now. If you're new to our charts, then join the Telegram community. D and the boys, Derek, Lambo, Lucas, and all the boys will be there on that channel. You can talk to those guys during the day and have that set up on your charts. Have it sitting in the corner here so you can read what those guys are doing. D will help you through the charts as well. He's always willing to share his trades with you guys. And you can be trading with him through May and June. Yep. I'll be right back. Hang on. What's the Telegram channel? That's if you go into the above in the description or the bio above, you'll see that there says 4 links. You just click on that and you'll see in that description there's a Telegram link and you can join that, and we're happy to have you join there for sure. So you're welcome to join them over there in Telegram there, Brian. Yeah, it's 24 hour access to everybody in there. If you got questions, pop it in there. Someone is going to give you a hand. We've got like Educators Corner. There's people dropping educational pieces in there. Index, futures, stock picks, Bitcoin, sidebar conversations about whatever you want to talk about. Just keep all your sidebar stuff over there that's not ICT related. Oil picks, gold, commodities. We got motivational corners, psychological stuff. If you're battling with psychological stuff, post a question in there. There's lots of stuff in there to help you out with some of the psychological battles you deal with. And we've got a Forex section there as well. So you're welcome to join in any one of the conversations and have a chat with people. It's free. Nobody's trying to charge you for anything. Nobody's trying to sell you anything. It's all for free. We're just here trying to help a bunch of people grow in their understanding of price action. That's our whole goal. I'm going to get out there and help my wife do some yard work before we go, because I don't want to see her doing all that stuff. So I kind of hope you guys have an awesome summer. I hope you have an incredible summer. I hope you guys are real kind to each other out there. Be kind to people, help people out. If you've got extra money to help people out, by all means do that. And we're going to go down there and help out some people with some schools, or a particular school. We're going down to the Masamara there and help out one of the schools with desks, books, pens, that kind of stuff, the stuff they need. So that's going to be exciting. So we'll take some video of that. Not that I want to promote helping out the African community. I don't want to be the great white hope. I don't want that to be that at all. But hey, look, if you've got some money and you can help people out, you know, get out there, and if you can turn your successes in the market into helping other people as well, it'll help you grow more as a person, I think. Anyway, that's my little preach. But yeah, I hope you guys have a wonderful summer. I hope you take care of yourselves, take care of your family, give them all a big hug, hug your family, love your friends, just be kind to each other out there. And I will see you guys in the markets, maybe in June. I'll be doing it from a European perspective. If I do get on, it won't be probably not in the mornings. It might be a bit late for me in England, but I will try and pop on and do a couple of European trades during the summer. Otherwise, I'll be back in July to meet up with you guys again. And August, the Jackson Hole. I'm looking forward to the nice swing perspective happening in July, August, and then catch a run into September, then a drop into October, and the big run for the rest of the year. That's what I'm kind of looking for, the seasonal tendency stuff. So until then, thank you so much, everybody. Love you all. Thank you for tuning into our show. I greatly appreciate every single one of you, all you new subscribers, all you old subscribers. I love you all. Thank you so much for your time, and I hope you got a chance to learn something here today. And keep your eyes on the prize up here today. I like that upside objectives to reach for. Oh, look at that. We're opening and closing on it. Let's go, Hadi. Get up there. And yeah, look at that. Right, open on it, close on it, tap, away you go. Come on, there you go. That's what we're looking for right there. What a perfect little spot. Anyway, it was a great place to end the show. You guys enjoy yourself. Have a great day out there. I love you all, and I'll see you guys in the charts. See ya.